What's going on, traders? It is Antoine Farrar back with another trading video with Digital Goatz Academy. Welcome to our weekly review segment. So, real quick as we go into it, man, Friday, I know for most traders across the board, Friday was somewhat of a depressing day. And if you don't know what I mean, just look at my screen right now. So if you're tuning into this channel, make sure you hit that like button, comment, and subscribe. But as we know, our favorite president, Donald Trump, ended up tweeting something basically about China, about imposing 100% tariffs on China, which brought the market down greatly. Now, I don't think his tweets alone impacted the market like this or affected it to just drive down so aggressively. I think along with the government shutdown, that didn't help. So that added basically fuel to the fire for the market to pretty much clear out any liquidity that was left over. Now, let's be honest, us as day traders, Forex traders, even though we couldn't have predicted this, we probably could have seen the possibility of the market like positioning itself like to these lower points. So for example, we're looking at S&P 500 right now. So S&P had a consolidation zone, which I like to mark. I mean that I like to annotate. So the market definitely blew through that, and then we're currently at the resistance that we broke away from, which was in September. Market brought us all the way back down to September. So these were unforeseen events, but for me as a trader, I'll be honest, there was a way to pinpoint this, and we'll kind of talk about that going into this segment right now, right? So let's break it down to basically what happened last week. Now, I didn't pay too much attention to well, no, we did pay attention to news because we were coming off of NFP or the week after NFP. Yeah, the week after we were coming off the week after NFP, right? So within that week, NFP was actually pretty docile, which was crazy. You know what I'm saying? That was probably like a red flag right there. Kind of docile. But anyway, from last week, from where we were at, remember, we always look at the previous Sunday's candle or the previous weekly candle, right? So we can see that last week price was bearish before we had, I mean, price was bullish before we had this major drop to the downside. It's fine Sunday. Sunday was over here. So Sunday on S&P basically broke out a consolidation. And we had another sweep that happened on Tuesday, which brought the market up, which basically created resistance. Now, here's one thing that we've discussed already. We discussed that we know that when news comes out, that can affect the market. But we know that when we don't have any major news, because if you looked at my FX book or Forex Factory, you probably noticed there wasn't a lot of major news articles. So what did that leave the market up to make a decision? Basically, political figures such as the president. So when Donald Trump, when President Trump said something, it affected the market greatly, drove the market down on top of us already being in a government shutdown. Now, here's what we've talked about when it comes to technical analysis and trading, right? We've always talked about looking at the opening bell. So we go into, and even for me, because I did take a loss, not following the things that I've learned that will trigger the market in either direction, right? So opening bell, one thing we've discussed, if we're trending up or vice versa, we were trending down, the direction that opening bell takes us initially normally is the area that is trying to go to the quickest so it can continue in that direction. So opening bell on Friday, it got very bullish, but not as bullish as it got bearish, right? But it was pretty aggressive. I'm talking about like for US 30, maybe like um 3,000 pips and like one candle, right? So the market couldn't handle that. Now, the one thing that we've already talked about is that at 9:30, wherever the market shoots off initially, that's where it's trying to go. By 9:40, 9:45, we should start seeing it show its true direction. So the fact that the market shot up on Friday, it's still playing to the laws that we've learned, the things that make up the market, yo. So all the technicals that we've been paying attention to, all the fundamentals that we've been paying attention to, even on Friday, the market is still responding in that way because we tend to have this ideology that the market is going to do something magic when it's really like, yes, this was unforeseen, but somebody could have caught the sell. We could have caught the sell had we just been more open-minded to say that, man, this thing might drag further down than we thought. Because exactly what happened in this area of S&P, now this was based off of Friday alone. You can see that the market got bullish from there around like 6 a.m. We pulled back. So 8:30 was where the market actually started getting crazy bullish. Well, showed signs of it getting bullish. Opening bell, and you can see right here, one candle shot the market up, then closed it, then continued, and this is on a 30-minute time frame, then continue pushing the market down heavily. But by then, like I think by that time it was like 11 a.m. By the time the market had fully shown its true colors and said, yo, this is exactly where I'm trying to head. But we could have identified this one with market structure, but also saying that, okay, we know when opening bell shoots up, like the initial reaction, not like it consolidated, like opening bell, 9:30, boom, it starts getting crazy bullish or it starts getting crazy bearish. That is normally telling you the direction because all I've personally seen is that opening bell is just trying to get to the area of structure the quickest way possible and then make its true move. So really, when we look at this consolidation that we really could have been able to identify at least a sell, not something as vicious as this, but at least a sell. And 9 times out of 10, if you would have had an open TP, you would have caught all this. Um, maybe you would have got out around here, but you would have caught all this. So yeah, we can say that. Well, this goes into what I talk about when it comes to like conspiracy trading a little bit, where it's like these things that happen in the market, we can determine ahead of time. So again, had we not, been more emotional or focusing or not focusing on the bigger picture, just with what I explained right then and there, we could have actually, put ourselves in position to have this to take advantage of the sell that happened. No expecting that it would make, like I said, S&P shot down 2,000 pips in one daily candle, like that's absurd. No, you couldn't have predicted something like that, but you could have predicted at least the sell to a lower position. You know what I'm saying? I think the market was just trying to because I think the market was just trying to finally correct itself based off of a lot of investors that are in the market this year. There's a lot more traders, there's a lot more stock investors. So clearing this out kind of makes sense to me. I don't understand the reason why it was so aggressive. But when you look at market structure, this makes sense. You know what I'm saying? Doing it that aggressive, no, but it makes sense that it's trying to clear out a lot of this leftover liquidity so it actually can continue rising. One thing that I've noticed that Donald Trump has been trying to force Jerome Powell to do is bring the market down. So to me, this was his reaction of saying, I want the market to come down the way I want it to. I'm not trying to wait for a rate cut or for a federal rate decision. You're not doing it at the time I need. I'm gonna bring it down. He brought down the market. And again, we've discussed this. If you've been viewing my channel, we've discussed that if there's no news on Forex Factory or whatever financial news outlet you use, we have to pay attention to political figures such as the president or anybody else that has like, their words impact the market. So big companies, you know what I'm saying? CEOs of companies like Intel, Nvidia, Apple, things like that. So we'll have to rely on those fundamental aspects of the market when it comes to getting our information. Could you have said, oh man, just because he said this, I think the market is about to drop? Maybe, probably, because we've known that every time he's had since he's talked about tariffs, it's been a negative impact in the market and it's definitely brought the market down great. I mean, this was where the tariffs pretty much took place. And you see it drove it down, but we're well beyond that. We're above where the market came down from last January. You know what I'm saying? We're up from when he won the election. See what I'm saying? So a lot of this, when it comes to the technical analysis part, it makes sense how this happened. Like, like I don't really understand how it triggered, but I don't think that this is going to be the move that brings the market down as far as like trying to sell it off. I think that this was just a necessary pullback that we have breaking out of these zones, and we'll probably continue to push higher. So make no mistake of that. So the one thing I've always discussed with my group is that you do need to have like your markup still set. Definitely we have zones because all these zones we pretty much pushed up from. The market is now returning, and that's crazy that it basically returned back to jobless claims from what was this, September or 2 months ago? No, a month ago. So it just corrected a whole month. Let's look at that. And we are below the new month now, so that can change things. But to me, we're still, I mean, this monthly candle is still open. So just based off of the momentum of of overall these candles and stuff right here, we can see that the market has probably just decided to correct itself right here because that's a major push, you know what I'm saying, in such a fast time. So I think that it'll basically start pushing itself back up once we get like clarity on how the market is going to move. Between today and going into this week. I haven't looked at any of the financial news for this week, so I'm gonna check that out and see like if that may sway. But I think that this was just the necessary correction that we needed in order to continue the trend going up. So for me, that means that when the rate hike, I mean when the federal rate decision comes at the end of this month, I don't think that we'll have a rate cut. I mean, look at how the market fell. I don't think that we'll have a rate cut. So seeing it clear all these lows, we just have to have some form of support established. Again, we are at a previous zone that we established, which was a while ago. Like I said, a whole month ago. And we're basically above a major buy zone that we annotated before. So I know this was I think it was like 64.17. That was like a hot buy zone for us. So I'm not sure if we'll get the market to push back that low because again, this was an area, again, like small annotations on your markups, right? So even this area kind of made me question like how the market can keep being bullish the entire time, and that kind of answered my question right there. I think it was looking for this area specifically. I think we had a gap right here in this area. I don't know what was going on, which made me draw the circle. I forgot it was a month ago, but the fact that the market stopped here, you see, you know what I'm saying? Even though it closed at that area going into the reset for next week, it still stopped at this area. It could have kept pushing down. So I'm thinking this is probably our new support structure, which is going to give us our buy zone. That's a major push down for the market that's even still trying to continue. The only thing I could see it trying to do is consolidate or range in this area before trying to push back up. But I think that we're basically back at an area of structure that the market is trying to buy off of. So that's for S&P, US 30, clean people clocks too. So US 30 was where basically I took my I took my defeat for Friday. All the way back down to the new resistance that we made. Again, I couldn't know that it was resistance had I not left it there. You know what I'm saying? So this did stick out to me, but again, I can't always be correct. I do have to pay attention to because this type of a pattern right here, this tells you that it's a selling pattern. I knew that it was a selling pattern. Initially, I just wasn't sure how far. I thought this was the sell and there was not going to be a continuation. But even the same thing, I witnessed this because I was trading US 30 on Friday. So we did make profit on Friday before the major drop, and I basically gave all that back and some, right? So even here, US 30, just starting off, just looking at Friday specifically, not even like backtracking to like Sunday, right? We can see that this has kind of been in a downtrend, even so. Well, let's look at Friday first. So Friday, basically at 1400, which is 2 o'clock on Thursday, it created some form of support, right? It wasn't strong, but it was some form, right? And we had our pullback around 5 a.m., which we kind of noticed that the market likes to drop if it's still bullish, if the trend is still up. What the market to do is buy up. I mean, push the market down during Sydney and Tokyo. So I call that post-market session because we're not trading New York anymore. So push the market down, normally selling it off specifically for indices, and then buy back up sometime during London. It could be at 4 a.m. What we've been noticing is that we would rather rely on the 5 a.m. candle now, instead of the 4 a.m. That kind of puts you a little bit early, so it could put you like higher when you rather be lower. So 5 a.m. allows you to kind of see the sequence of events, going on with the market. So 6 a.m. bought the market back up, and then obviously we got dumb bullish at opening bell. This is the hour candle, so it's just reflecting 9 a.m., not like opening bell what it did on 9:30. But if we go down to a 30-minute candle, you can see how aggressively, and then it didn't look like this initially. It was a bull candle, right? And then it pushed down as like we got to what, like 9:45. Let's see. It's crazy, right? Crazy. 9:45, right? But what I'm showing everyone is that we could have identified at least a sell. Not how aggressive it was, but at least a sell, because what have we talked about when it comes to opening bell? Whatever opening bell does initially, now it's different if there's news impacting it or consolidation. So yes, there's like a gray area, but at the same time, um, there's more in-depth knowledge, but the gray area still helps you. You know what I'm saying? So we know that if initially, I'm talking about opening bell, 9:30 on the dot, gets done bullish or gets done bearish, it's telling you what it's trying to do. You just don't know where the turnaround is. But what we've been seeing is that the turnaround is normally about around what? 9:45. 9:45, we could identify, put ourselves in a position to capture all this. If you wanted to be the trader that said, I'm gonna leave an open target just to see like how low the market goes, and boom, it would have put you back in position to buy back up again, because I don't think that we're going below this. If anything, I think that we may try to push into like the gap that we're at over here, because we do have a gap and consolidation. I guess I have to bring that over too. Oh, and this was our initial buy entry too. We had this as a previous buy entry. I didn't think I would be bringing any of this data over, to be honest. But here we are. So as you can see, that was a previous support structure that I had. This was a previous level of consolidation, as we know, and we're currently at the new resistance. So even with the market breaking like this, I still think that we're buying back up. I don't think that I think that this was to correct the market the way that the president was looking for it to do, instead of waiting till the end of October and then we get a rate cut. Or if we continue pushing up, basically a rate cut in December could have probably been way vicious. We probably could have seen, like, for example, US 30 as high as like 48K, and then the rate cut pushes us all the way back down here. You know what I'm saying? That would have been insane. But as I said before, like when it comes to us as new traders, like we're the ones creating the information and the knowledge for like the future generations. So all this stuff, you can't predict this based off the past. And that's what I like to discuss, because it's like, who would have been able to say, oh man, the market would have dropped, like, I think there was like $1.8 billion lost like in like one move. You know what I'm saying? Like that was like a day's move. Like that's crazy. You know what I'm saying? Imagine what it looked like during the stock market crash, you know what I'm saying? During the Great Depression, you know what I mean? Like imagine like if that would have affected people like that. You know what I'm saying? Like there's no way you would have been able to predict that. Yeah, some people can predict it, but it's like retail traders and investors, like, I mean, retail traders, like, you wouldn't have been able to predict a move like this. So again, we're recording the new data so that way this can be something of use for future generations. So what I'm getting at is that every piece of information that we've used that's been based off the past, all of it's not going to be 100 correct to use in present day. You know what I'm saying? Because again, nobody would have been able to say, "Oh man, I would have saw this coming." Maybe somebody. Yeah, obviously we know there's inside information that we're not privy to. But I'm talking about us, me and you, that are on here trading day to day or week to week. You know what I'm saying? In hopes of trying to reach a bigger financial status. So, you just got to have rules and be set in your routine as a trader. So things like this don't happen. I mean, they're gonna happen, but you can do things to avoid this. One thing, like I said, is like focusing on how the market is reacting. Like again, we could have at least saw the sell. We didn't see the sell like this, but the market told us that it wanted to sell off. I kind of saw that it wanted to sell off, but fighting it's UVU. I mean, it's you versus you when you're doing this trading game, right? So now that we're back at new resistance, I think that, well, one, this was a previous buy zone. This is a major level of consolidation. We just got to see how the market is going to react for a Sunday going into Monday. But I do think that this is probably our buy zone. Just looking at it on a daily time frame, we do have room to push down a little bit more, so I wouldn't be surprised of that. But to me, that'd just be to test this daily time frame, confirm it, and then push it back up. I do think that we're going to get maybe not one bull candle, but I do think that eventually, like as we're building bull candles, the market is going to break higher than this area that we sold off from. So this just looks like a major correction that, punched us in the face, but wasn't too bad. Now, the only thing that we did see was profitable this week was Forex pairs. We did look at the sell for GBP USD. And just to kind of walk through that very quick, I'm still staying, true to my analysis on that. I believe that the dollar is still going to be inflated. And now we're having that turning point for other countries' currencies to start declining in value again. So we should see that GBP USD, for example, the British pound, we had a sell point right here, and then I knew that this was support structure. So it kind of played around before it actually broke to the downside. And then obviously you can see that Friday we pushed back up. But this was our entry. We did hit our target. We had like two opportunities to jump in, really around three. So this was our initial entry off of this move right here, which pushed us down to like 27 pips. 40 pips. I didn't know that. Then the market brought us basically back to entry. Still nothing, still not putting our stop loss in jeopardy. So you can see that it went 12 pips, which isn't that bad, especially when it comes to a Forex pair. 12 pips in drawdown. I mean, if you were moving at a standard, that's only $120. So we can see that our initial move, our first move off of that was what? 54 pips. So if you're a scalper, then you could have taken advantage of that. It didn't come quite back to entry, but a little bit shy of it. And off of that move, got 75 pips. And then I think this was Thursday going into Friday. Yeah, Thursday going into Friday gave us our target and then just a little bit more. So, damn, that move was 33 pips. But our overall move, I think, was 100 pips flat. Just about. Yeah. Wow, it was. So our overall target was 100 pips flat. So, we took full advantage of that. And all it looks like right now is that, the market is just trying to correct itself. So I don't know if we're going to try to create resistance back at the entry, which could happen, or if price is going to create resistance at this support structure that we finally broke. But I think that we're still continuing down. Again, we've already seen that when it comes to one, the British pound, against the dollar and USD JPY, the direction is pretty much set. You know what I'm saying? Like we can clearly see that the market is trying to push us down. We have major structure that just indicates that, yeah, we're still trying to fall off the face of this earth. And this is one thing that I mentioned is that we're definitely going to at least try to get to the support structure before we start buying up. So I don't know if it'll react off of the support structure, but that's the target that I'm looking for. So just looking at it over here, not to give an analysis because you would have to wait for market forecasts for our predictions. But we like to discuss, where the market is at currently and where it's at based off the fib, if that's not too much confusion for you. Let me draw this back. You can see that we're at the 618, which is considered the gold zone in your position. So whether you're buying or selling, whenever the market pulls back to that area, that's probably where you're looking at a potential entry. And as you can see, it kind of pushed into our support structure that is now resistance because we broke that. We just have to see what Sunday brings. But if anything, we can push a little bit higher. But currently, the market is at a low, the low point of where it broke out of based off the daily candle. So you can see this wick over here. Looks like where the market is targeting. And again, if you scale down and break this down to a smaller time frame, you can see that's probably either consolidation or a low point that again the market is targeting, but because we're on a higher time frame, we're not seeing like how that's constructed. That makes sense. But that's all I got, traders. I'm still positive. You know what I'm saying? I'm still in high spirits. That was ugly. Don't get me wrong. That was ugly, is what I like to say, fugly, you know what I'm saying? But um we're still in the right position. You know what I'm saying? I think that just cleaned out people for that week. But I mean, as far as like overall, our predictions, our analysis have been pretty much spot on and at least putting us in position, even if we've been off slightly. So you're gonna take the losses, like expect that, but I mean, keep your heads up, you know what I'm saying? Follow your rules, follow your principles that you have to minimize the losses that you may take, knowing that you're gonna take losses anyway. But that's all I got for you traders. I will catch y'all on the next video with Digital Goats Academy, which is market forecast. I hope this information serves you greatly, and I hope everybody correct themselves and, make a lot of money this week as always. So I'll catch y'all in the next video. I'm Antoine Farrell. Peace.